Summer has historically proved to be a very bearish period for commodities. Helping us understand this is the Bloomberg Commodity Index, an index launched in 1998 that encompasses 23 commodities, virtually all the major ones, and is composed in such a way that none of the commodities weigh too heavily within this basket and affect its performance. Looking at the seasonality of this index using forecaster software, we see that over the past 20 years, the commodity index has had a negative summer starting at the highs in early June and ending at the lows in early October. Even at 5 and 10 years, the statistics are negative for commodities in the summer period, although in this case the time window is narrowed. In fact, the decline started a few days late in the last 10 years and ended statistically earlier in the last 5, with the low touched on the 5th of July. The statistic, therefore, is very accurate, but rather than going to shorts this index, which, as we said, averages many commodities and therefore will inevitably mark lower performance, by analyzing the commodities one by one, we found a really interesting statistic on one such commodity. I'm talking about coffee, which over the last 5 years has had a really crazy performance. Crazy is clearly meant downward. Let's move to the forecaster so we can see the whole thing in detail. Over the last 5 years, a short on this commodity opened on the 1 of June and closed on the 13th of July would have turned a profit 5 times out of 5. The average return on the trade would have been 6 and 8%. With the highest profits made in 2,222 and 2018 with a plus 13 and a plus 12%. Widening the time horizon, however, the operation remains very good with 80% positive returns for the operation in the last 10 years and 70% in the last 20. This coffee trade, therefore, is statistically very valid, but as always, let us not use seasonality alone. Let us use it in synergy with technical analysis. So let us move to the charts to see what coffee prices are saying. Here we are on the coffee chart of the Kimura trading platform. We see precisely that the trend on coffee is definitely bearish in the medium to long term. We see precisely that prices have even retested a very important resistive area precisely with this March high. If we are going to draw a trend line starting from this low, we see that indeed the trend seems to have reversed downward again, because just precisely a few days ago there was the downward break. So prices are back in the direction of the main trend. Now prices as their first target most likely have this previous low positioned in the 170 area, but given the very negative trend of commodities in this period, it is not excluded that prices could return to this trend line that we are going to draw now. So here we have first target 170, but it is not excluded that prices could also return to the 160 area. The technical analysis also confirms the seasonality view. If you like this analysis, I recommend you subscribe to our YouTube channel. I recommend you go to forecaster.biz. I'll leave it in description. You can try the seasonality calculation software for free. You can calculate seasonality on all the instruments in the world. It's really crazy. Also, if you want to try to replicate the trade that we proposed in this video, I invite you to visit the site of our broker partner, kimuratrading.com.